Right, so we've covered swing trading and what that entails. We've also now covered momentum in the second video. Now I want to go into um, trend following. Okay, what is trend following? And look, momentum, in my opinion, and this is how I use it, is to cover the key moment where you would see a shift in the direction of a trend. Okay, the early start of a trend, which is this area here. Okay, you already identified that this would be a key point where you would enter, or maybe here if you want to be a little bit early, but let's say here. Now, when we've entered on this trend reversal, what we need to do is we need to follow the trend. Okay, now we have what I would call a long only direction of our trades. And this is what we should only be looking to trade. Okay. This from this pivot point here is long only. Right. Now, if you're a good trader and you know where certain zones and areas are, you can trade it here and ride this trend while it does these dips, breaks out again, consolidates, breaks out again, moves up higher, comes back down, support around these levels, and you keep on holding it. Okay. There are certain moments where you might be faked out of a trade and you're forced to re-enter. How do you do that? Well, you look at continuations in this trend, and this is where trend following comes in. You have the initial move, the dip, and then you have another confirmation candle, which or the break of the structure that you've seen here, and that would be a re-entry point to then ride the trend higher. That areas once we've shifted in momentum and direction, we are long only, and we never try to go into the mean reversion trades because that's where the risk is and where you tend to have low risk reward ratios. So here you would have had two opportunities with this bull flag here, a re-break of that bull flag, continuation. Then you have a high type flag, a break of that area, and then a continuation here, and so on. Now, you have these many areas that you can trade in the lower time frames within this trend on the daily, or you're going to have restructuring on the daily after this big trend. If you have it through the whole time and sold around this area, you then have a lower low developing, lower high, and then a lower, and then a higher low, and then a re-break. And this structure here would be a bull flag again, a ignition candle here, like moves up higher, breaks, and then you have another trend that you can follow and trade. Now, it depends on you what time frames you want to use. If you're using the lower time frames, you see the shift here in long only on the daily. You can move to these lower time frames and trade these dips on the daily as they bounce and then continue within the trend. If you just want to focus on the daily, like I tend to do for the most part with my trading, it would be riding this whole trend here, comes back down on this restructuring as it develops a higher low and then creates a higher high and a break in this area, we then retrade it for this move here. Okay. That's how you do trend following. You basically identify direction after the momentum shift and the trend reversal, and then you look to trade only continuations on that trend and you follow the trend until it's over. The trend in this situation was over when we broke this level, and since then we have never retaken the higher high, and we haven't had a key shift in direction except for this level here, which was a bit of a fake out. We have supported here until today, which is 27th of March. We've shifted here into break below. Now, it depends on how early you want to enter these trades and where you want to position them, but this is the idea of trend following and a broad overview of how I use trend following to my advantage to enter into continuation trades and profit from the market direction.